Good morning, and welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, lead oil analyst here at Stratus Advisors. Brent fell $2.11 a barrel last week to average $68.21. WTI fell even more sharply, down $3.80 a barrel to average $57.01. Both crudes lost more than $5 a barrel from their prices at the start of last week as sentiment swiftly turned against crude. Stratus Advisors has expected these oscillations for some time now, and a common theme in these weekly analyses has been that the longer a bull or bear run lasts without fundamental support, the more severe the corrections will be. We expect prices will continue to fall, albeit less dramatically this week, with Brent averaging $61 a barrel as markets seek a floor. Economic concerns have been a major negative pressure. The tariff dispute with China continues to drag on, and complicating matters, both countries now appear engaged in a tit-for-tat blacklisting firms from doing business in each country. And at the end of last week, President Trump made a surprise announcement that imports from Mexico could be subject to an escalating 5% tariff if the Mexican government does not do more to stem the flow of migrants to the United States. Senior Mexican officials are meeting with their White House counterparts this week to discuss the threat and possible solutions. While the tariffs would certainly have an economic impact, this announcement also undermines trust in negotiating with the United States, as a revised NAFTA bill still awaits approval from the Canada, Mexico, and U.S. legislatures. Geopolitics will be a neutral factor in the week ahead. Tensions remain high in the Middle East, but with no new developments, there's no incentive to price in further risk. The global economy will be a negative factor in the week ahead. Investors are increasingly worried about the pace of global growth in light of the myriad trade disputes underway. Supply will be a negative factor in the week ahead. Oversupply concerns remain focused on the United States, but in light of the recent price correction, OPEC members have also started reassuring markets that any increase in supply will be fully justified by pricing and fundamentals. While strong, oil demand is still likely to be a neutral factor in the week ahead. Margins globally are generally below their seasonal averages for this time of year. However, utilization is still high and product stocks are falling.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us. For more Hard Energy videos, follow our social media channels.